All right. Well, good morning, everybody. I wanted to welcome you to our latest Building Blocks for Success workshop in our series. Today's title is New Year, New Rules. Is your company compliant? Which is, we always try to provide timely information, but this one is incredibly timely, not only because we're ready to embark on a new calendar year, but because of all the new rules that have passed down from the federal government and everything else. And so we are excited to have with us today one of our supportive services consultants. This especially our certification and management assistance consultants from districts 5 and 6, and Melissa Hamilton of Synergetic Solutions is here with us today along with her team. Melissa's initials are MVP around here, and so we're very, very grateful for all that she does, both uh, in public and behind the scenes to help us out and to keep me sane. So, Melissa, we're very grateful for you and your team and all the hard work you do. And thank you for bringing this information to us today.
Well, perfect. Thank you, Brian. I think sometimes I wonder if I'm driving you insane. So I appreciate the fact that there's sanity involved in this. But as Brian said, welcome to our workshop. This is our final one for our December workshop series. So excited to have you all. If you'd like, please put your name and your company name and the city you're located in the chat. We appreciate you joining here today. So thank you. As Brian said, I'm Melissa Hamilton. The company I own is Synergetic Solutions, and I've been a supportive service consultant for IDOT for off and on for about almost 10 years, I believe. So it's always been a great honor. And I have the privilege of having two subcontracting consultants with me as well that are providing support on both the certification and management contracts that we support through districts 4 through 6. The first is LaShonda Fitch. She's the CEO of Connect the Dots Consulting. She also is subcontracting in District 7 through 9 as well. And I appreciate her so much and all the work that she does to help support this contract as well and the knowledge that she brings. And then Emmanuel, he goes by Manny Michelson, is the CEO of TPH Strategies. He is a newer member of our team. He has a plethora of knowledge as it relates to taxes and finances, and he will be helping to support as well. So very excited to have him on board as well. Just a couple of housekeeping items, if you don't mind, mute yourself and keep your video off. It does help with our streaming. This session is being recorded, and we will provide the recording as well as all of the resources and documents, a copy of the presentation, and all the other links that you might need. We'll provide that to you this week. If you do have questions that you do not want to identify yourself, please either private message them to myself or one of the consultants on the team, and we'll be sure to answer it without disclosing your information, your identity. But the call is recorded and will be posted publicly on our YouTube channel as well. We have two options for you to enter your questions. You can either use the chat or the Q&A. We will pause throughout the presentation as well to check those boxes and answer any questions that you may have. And then if the additional clarification is needed, obviously we will coordinate that accordingly. And then at the very end, we will have a link to take a short survey. We really hope and appreciate you taking some time to complete that. Sometimes our workshops end a little early, so it allows time for you to do that. But that information really helps us with improving not only our workshop series, but also the type of content that we're able to provide and the use of the various presenters and subject experts that we're utilizing to share and provide you with the knowledge and education that you need. So today's agenda, we've already covered our introductions and housekeeping. We will first go over the Corporate Transparency Act and the changes that are taking place with that. Then we'll move into the tax essentials, making sure that you're staying ahead in 2025. We will then cover the labor law changes, have additional Q&A I'll share with you some of the supportive services benefits to the program that we have, as well as the events and workshops that are coming up, which I'm always excited about. And then we'll have some closing remarks, and then, of course, the evaluation and survey at the end. I do want to make sure we emphasize this disclaimer. As Brian mentioned, this workshop does cover federal changes, also some state law changes, but this information that's being presented today is informational for informational purposes only. It's not intended to provide accounting, legal, tax, financial, or professional advice to you. It does not take into account your individual and company circumstances or needs. So before acting on any of the information that you receive in this presentation, please consult a tax professional, attorney, or professional to analyze and address your specific needs and make sure that the information is applicable to your company. So with that said, I'm going to turn it over to Ms. LaShonda Fitch, and she will begin the corporate transparency information.
Awesome. Thank you so much, Melissa. And good morning, everyone. We are going to go over a very high-level overview for the Corporate Transparency Act today. So for those who have not filed their Beneficial Ownership Information Report, also known as BOI, you may be in luck because right now there is no requirement to have it reported in light of a recent federal court order that was issued earlier this month out of Texas. And so basically the order is stating that reporting companies, which will be defined on the next slide, are not currently reported to file the BOI information with the Financial Crimes Enforcement Network, known as FinCEN, and companies are not subject to liability if they fail to do so while the order remains in force. However, reporting companies may continue to voluntarily submit the BOI reports. So what is the Corporate Transparency Act? In summary, it is a U.S. federal it's a U.S. federal law enacted to combat money laundering, tax fraud, and other illicit activities. It also requires certain entities to disclose beneficial ownership information to the Financial Crimes Enforcement Network. The overall purpose of the act is to increase transparency in corporate structures, also support law enforcement efforts, also known to support enforcement efforts to detect and prevent financial crimes. The reporting entities that are required to file are corporations, limited liability companies, and other similar entities, created or registered in the U.S. Also, foreign entities registered to do business in the United States. Note that other similar entities can be DBAs that are filed with doing business as, that are filed with the Secretary of State. All right, so again, as Melissa stated earlier, I am not a FinCEN representative, so this information that is provided to you today has been referenced from the FinCEN.gov website, which there is a slide at the end of this portion of the presentation that has all the links and resources available to you to go more in depth of the information, as it is very involved. So today, my goal is to cover the reporting requirements, the exemptions, companies that are exempt, and then we will go into the portal to show you how to file. All right, so with the reporting requirements, if the company was created or registered prior to this year, they would have had until January 1st of next year to report. If the company was created in this year, they would have had 90 calendar days after receiving actual or public notice that the company's creation or registration was effective, whichever was earlier. And the registration is the filed copy of the Articles of Organization or the Articles of Incorporation by the Secretary of State. So if this is to be reenacted or back and forth reinforced, the companies created next year will have 30 days to report their BOI information once they receive that file Secretary of State organization document. And going forward, they may require updates or corrections. And if so, or excuse me, if there's any updates or corrections, the BOI information would be needed to be submitted within a 30 calendar day timeline. So who is required to file? Anyone a reporting company authorizes to act on its behalf, such as who can file. So anyone who the reporting company authorizes to file on its behalf, such as an employee, an owner, or a third-party service provider. The service provider can be your tax professional or a legal professional as well, and they may file on the company's behalf. When submitting the BOI report, this individual should be prepared to provide basic contact information about themselves, including their name and email address. The person filing the BOI report, including a third-party service provider, must certify on behalf of the reporting company that the information is true, correct, and complete. So there is an attestation right before submitting, and this is what this is alluding to. As it relates to owner and applicant, the reporting requirements, this is a definition of the two. And so a beneficial owner is defined as any individual who directly or indirectly exercises substantial control over a company and owns or controls at least 25% of the ownership interest of a company. As it relates to a company applicant, this is either one or two individuals who directly filed the document that created a domestic company or filed the document that first registered a foreign company, and or the individual who primarily is responsible for directing or controlling the filing. So my understanding is that it could be the registered agent who is the one who filed the company. And note that the company applicant is only required for companies who were created or registered this year. It doesn't apply to those who registered prior to 2024. So as it relates to more definition regarding the beneficial owners, these are individuals who can, or an individual who exercises substantial control over a reporting company in 4 different ways. If the individual falls into any of the categories below, the individual is exercising substantial control. So it's an individual who is a senior officer, whether that's a CFO, a company president, a CFO, or even general counsel, and others listed there. If the individual has authority to appoint or remove certain officers or majority of directors of the reporting company. If the individual is an important decision maker for the reporting company. And if the individual has any other form of substantial control over the reporting company, as explained further in FinCEN's Small Entity Compliance Guide. So this slide goes into a little bit more in depth because as the previous slide stated, it just gave a simple answer to what an important or a statement on important decision making. So I wanted to give some more context into that. And so the important decision maker, is any individual who directs, determines, or has substantial influence over important decisions made by the reporting company. This can include decision-making on the overall business nature or scope. Also, this important decision-making regarding the termination of the business or even the geographical focus. When it relates to finances, the influence on the sale, lease, or mortgage, or any other transfers of any principal assets. And then as it relates to the structure, anyone who has significant influence regarding the reorganization, dissolution, or merger, just to name a few of those. So as it relates to ownership interest, it's generally an arrangement that establishes ownership rights in the reporting company. Examples of ownership interest include shares of stock, equity, and voting rights, or any other mechanism used to establish ownership. This slide goes into a little bit more depth as it relates to ownership interest. So not only is it the equity, stock, or voting rights, they provided some examples, whether it's those reflected on pre-organization, certificate, or subscription, but also regarding ownership interest when it relates to, as it relates to capital or profit interest and convertible instruments as well. With the reporting information, note that there is not a maximum number of beneficial owners who would be required to report to FinCEN. And this page is providing a snapshot of the information that is required about the beneficial owners of the company. So as you can see, they're requiring the name, the date of birth, the primary address for the beneficial owner. Social security number is excluded, but they do want a copy of a ID or driver's license or passport. Some kind of visual image is going to be required to be uploaded. And then as it relates to information about the entity itself, they're asking for the name, the doing business as name, if that is applicable, the address, which PO Box cannot be submitted, and then the jurisdiction of formation, so the country and origin where the entity has been created or formed. And then lastly, the tax ID number for the business entity. Now we will go into, we just completed the reporting requirements or reporting information. Now we will talk about the exempt companies here. They have predefined 23 different organizations as they are exempt because they are exempt because they have reporting requirements in effect now. So this is basically an opportunity for them to not have to double report. So those companies are going to be public traded companies, banks, credit unions, and other financial institutions, nonprofits, and certain large operating companies, specifically those who have 20 or more employees who work about over 30 hours per week and average about 5 million in gross receipts. And then tax exempt entities such as a 501c or 501c3, and then any political organizations are exempt from the reporting. Filing fees and deadlines, as it relates to this, there is no filing fee to submit the beneficial ownership report through FinCEN. However, you may have service providers such as a tax professional or a legal attorney that would file for the company and charge a service fee for doing so. Just be cautious because I am aware there's several organizations or service providers, that can charge up to $1,000. So just be mindful of what that service fee would be. As it relates to deadlines, again, if this is to go back into enforcement, newly formed entities next year will have 30 days to report this information. And then if failure to provide and report the information will lead up to civil penalties, up to $500 per day for noncompliance, criminal penalties up to $10,000 in fines, and up to 2 years in imprisonment. And of course, in order to avoid the penalties, they're asking that you file accurate and timely reports, and then any changes or updates be done within 30 days. All right, so now we're going to go into the portal here. And as you'll see, it's very user-friendly. So this is the first page that you'll see. The first tab is the filing information. And the first question is, what type of filing is this? Is this an initial report? Is it a correction to a prior report? Is it an update to a prior report? Or is it a newly exempt entity reporting? And they are capturing the date of that report. The next section is the information on the reporting company. So as it relates to number 3, it is allowing for either individuals and or the company to file or request for a FinCEN ID number. And so that ID will save time as it allow for you to enter the information that they're collecting, and in lieu of putting that information into the system, you can use the number instead. And then for foreign pooled investment companies, which I learned is a type of investment fund that pools money from multiple investors to invest in securities of companies listed on the foreign stock exchange. So they have an option to select if they are a part of a foreign pool investment vehicle. And then the next section asks for the legal name. So this is the legal reporting of the business, and then if it has any DBAs or a DBA, excuse me, associated with it. All right, so continuing on at the bottom or on that same tab, the form of identification. So this is where it's asking for the business tax ID number, or if it's a foreign entity, I think it's an ITIN number. And then the jurisdiction of formation. So what country was the business created or formed in? Next is the US address. Again, PO boxes are not accepted. So physical addresses here for the business. And then that completes the reporting company information. So now it's going into the company applicant. Again, for companies who, if you can go back, okay. For companies who were formed prior to this year, you don't even have to worry about this, but if you did form within 2024, this tab would be relevant. As you can see, it does give a spot for the FinCEN ID. So if that information is entered, all the rest of it would be omitted. You wouldn't have to worry about filling out the rest, is my understanding. And then on the later, or excuse me, going down on that page, it's asking for, again, the legal, or let me back up one, the legal name and date of birth of the individual who is the company applicant. So this is, if you don't have a company applicant, this is the person who's submitting on behalf of the company. So that information would be filled out for the person who's submitting. So if a service provider, this is where their information would go. And then next is the current address for that individual. It does allow for them to use a business address if they choose. And then it's very small on the screen, so I got to remember what it says. The form of jurisdiction is next. So what country the business was formed in. No, that's the identification of the individual. Sorry about that. So this is where you would put your ID information, so driver's license, passport, and then it is requiring an uploaded image of that. So to be prepared for that. All right, next slide. Okay, so we just got done with the company applicant or the individual filing on behalf of the company. Now it's the beneficial ownership information. And so again, if if this is a parent or guardian owned company, or parent or guardian facilitated company, this is where you would mark that box. If not, you have an option to put in the beneficial owner's FinCEN ID, and then mark if number 37 is marking if this is a tax exempt or an exempt entity. And then it asks for additional information if so. Next is, again, we're on the beneficial ownership screen. And so it's asking for that owner's information, legal name and date of birth, and then their residential address. Next is the form of ID, so uploading the ID for the beneficial owner. And then the next, actually, I think that's at the bottom of the page, or no, that's the next tab, sorry. The beneficial ownership report submission. So this is the attestation page where it is asking for email address, which is where that the confirmation of the report will go to, and the name of the individual who's submitting the report. And so the box is, there's a box required to, again, state that this information reported is true and accurate to the best of that person's ability. And that concludes the actual reporting through the portal. All right, so with additional information as it relates to information sharing. So note that FinCEN is an extension of the U.S. Treasury Department. And so with it being a federal attached to a federal agency, they may share information with other agencies such as the National Security or Intelligence. On the state level, they may share with the Secretary of State or whichever other government entities. And then, of course, with their Department of the Treasury. Also note that with financial institutions, they kind of have a backup plan. You may notice if you open a new bank account, business account specifically, that they'll be collecting this information. So just so you're aware that there could be some information sharing to collect on beneficial ownership information outside of FinCEN. All right, additional information to consider is that there is no paper application or excuse me, paper report. So this is all digital. So you have to go to the fincen.gov website or the portal, which we do have a link to that direct portal here on the next couple of slides. Note that compliance, it would be mandatory if this goes back into effect. And for anyone who has any concerns, to speak to their legal counsel or professional financial professional if they have any concerns. As it relates to record keeping, that you maintain the updated records of the beneficial ownership information and definitely retain the confirmation receipt that'll be emailed after the report is filed. You do have an option to print as well. And then as it relates to future updates, which is critical because we don't know if this is going to go away or if they're going to bring it back. So following along and making sure you keep yourself updated as they continue the injuncture here. And then just reinforcement that the financial institutions would work collectively to collect this information regarding the beneficial ownership information. So as promised, here are those citations and resources. I've provided the direct website to fincen.gov, the filing portal that we went through during the presentation. Note that the Department of Commerce and Economic Opportunity do have technical assistance available for firms through the Small Business Development Centers. They're able to assist there. The subscription, so if you do want to keep updated, there is a link to subscribe to updates. Also, the federal code is provided for you, and then the reference guide. All right. So in summary, again, the Corporate Transparency Act is to promote transparency and combat financial crimes. The compliance will be crucial if it again becomes effective and in order to avoid penalties. Note that the information is pretty much confidential, but they may share information amongst the government entities. And then there is no fee to file the report. And right now it is a one-time filing. So we'll see what's to come in the future days. And if you receive any emails, letters, or phone calls asking you to share your information to comply with the new regulations, they are most likely to be fraudulent. So be careful for anyone who's asking for additional information on this filing.
All right. Well, thank you, LaShonda, for covering. I've checked the chat and I currently do not see any questions pertaining to um, the presentation. It looks like there may have been a little bit of sound lapse for some individuals. And if so, we apologize for that. However, the call or the webinar is being recorded. So we'll have that available to you again to play and make those adjustments there, in addition to all of the presentation screenshots that you've seen today as well for you to reference. So hopefully the sound issues are worked out. If not, feel free to continue to drop us a message in the chat there. And if you think of any questions as we move on to our next session, feel free to add those in the chat and we can always revisit and go back and answer any questions that you have also. As LaShonda did a great job of showing you that portal, I know that it is not very difficult to complete. I've done my own and I also don't remember doing it, that it was so easy. But I do know that there are companies that will assist you with this if this is something that you would like for them to do. Just be very cautious that you're not being overcharged for this service, because it is fairly simplistic. But I do get and understand that sometimes we are just busy running and operating our business, and it's just easier to have a professional provide and handle services for us. So definitely check with your SBDC or Small Business Development Center in your local area. They can also support and assist you with completing that also. So thank you for that, LaShonda. And we're going to move on next to our next presenter, Manny Davis. Manny Michelson. He is going to go over the tax changes for 2025. And Manny, I will turn it over to you now.
Thank you, Melissa. Can you go back one slide for me, please? Okay, so thank you for that great content, LaShonda. Good morning, everyone. Again, my name is Emmanuel Michelson, and I'll be going over some important tax changes heading into 2025. So to kick things off, let's start at a micro level and explore some upcoming Illinois tax changes. I'll be diving into House Bill 4951, what it is, and how it will impact you and your business. I'll be reading directly from the screen here, but on June 7th, Governor J.B. Pritzker signed House Bill 4951, which introduces significant modifications to Illinois income, franchise, sales, and use tax laws. These changes take effect for tax years beginning on or after January 1st, 2025. So this next slide is a bit of a mouthful, so please bear with me. This first modification is something really cool that can benefit both businesses and the community, that being the newly renamed Returning Citizens Income Tax Credit. Illinois lawmakers gave this credit a major makeover, starting with changing the language in Section 216 from ex-offenders and felons to returning citizens. This credit used to just be 5% of qualified wages, but it's been increased to 15% of qualified wages. Now, to get into the weeds a little bit, Section 216 defines qualified wages as the following. 1, only wages that are subject to federal unemployment tax without regard to any dollar limitation. 2, it does not include any amounts paid or incurred by an employer for any period to any qualified returning citizen for whom the employer received federally funded payment for on-the-job training of that qualified returning citizen. And 3, only includes wages attributable to services rendered during the 1-year period beginning with the day the qualified returning citizen begins work for the employer. Let me add that if the employer has received any payments from any federal programs with respect to a qualified returning citizen, for purposes of calculating the tax credit, the amount of the qualified wages paid to that returning citizen must be reduced by the amount of the federal payments received. Lastly, the total credit allowed with respect to each qualified returning citizen has been increased as well. For tax years ending on or before December 31st, 2024, the credit amount is $1,500. This has been increased to $7,500 for taxable years ending on or after December 31st, 2025. And the total amount in credit that may be rewarded under Section 216 has been capped at $1 million per taxable year. So these next few slides, I'll be going over the Illinois franchise tax exemptions and its changes. I'll be keeping it rather high level, so please consult a tax professional if you feel like these changes impact you. So House Bill 4951 amended Section 15.35 and 15.65 of the Business Corporation Act of 1983. Illinois imposes a franchise tax on businesses for the privilege of exercising their franchise in the state, and an initial franchise tax is paid at the time the business files its first report of issuance of shares, and an additional franchise tax is paid if additional shares are issued or there's been an increase in paid-in capital without issuing additional shares. As a means to provide relief for smaller businesses, the state does offer an exemption from this tax. So House Bill 4951 increases the previous $5,000 exemption to $10,000 for annual reports due on or after January 1st, 2025. The current $5,000 exemption remains in place for any reports due on or after January 1st, 2024 and before January 1st, 2025. So as you can see in the chart, this exemption has increased over the years, but this most recent change is the largest. Okay, let's zoom out to the macro level and look at some of the federal tax changes. So in 2017, former President Donald Trump signed into law the Tax Cut and Jobs Act, also referred to as the TCJA. The provisions set forth in the TCJA are set to expire at the end of 2025, bearing any potential extensions made by the now president-elect. So one of those provisions is the qualified business income deduction, also called the Section 199A deduction. So this deduction allows eligible taxpayers to deduct up to 20% of their qualified business income, plus 20% of qualified real estate investment trust dividends and qualified publicly traded partnership income. This deduction is great because it's available to eligible taxpayers regardless of whether they itemize or take the standard deduction. So I've been throwing a lot of words at you, so let's take a look at a real world example about how these changes could impact your taxes. So if you look in both 2024 and 2026, which is the year post the sunset, let's say we have a qualified business owner with qualified business income of $2 million. In 2024, they take the QBI deduction, which would reduce their taxable income to $1.6 million. And if you compare that to 2026, where there's potentially no deduction, they're getting taxed on the full $2 million. Now, if we skip down to the last row, you can see that losing the QBI deduction will cost this business owner about $200,000 in taxes. So this potential loss means you should be strategizing with your accountant in 2025 to prepare for these changes. So another big change comes in the phase out of bonus depreciation. Bonus depreciation provides a tax break to businesses by allowing them to expense a large portion of the cost of new and used equipment in the year it was purchased. So in 2024, the percentage is 60%, but it decreases to 40% in 2025, 20% in 2026, and is completely phased out by 2027. Bonus depreciation can also be paired with Section 179 deduction, with the Section 179 deduction, to create two powerful tax-saving tools when it comes to buying equipment for your business. So please remember to consult your accountant on best practices on how to handle this depreciation expense. So let's switch gears into compliance and talk about the Form W-9, its importance, and some minor changes made to the form. Please remember that the W-9 form is used by businesses to collect tax information from the individuals or companies they hire for work who aren't employees. So this includes freelancers, independent contractors, and other self-employed individuals. And this form collects basic information like name, address, and tax ID. So why is this form needed? For starters, it's needed because this information helps to accurately report payments made to those non-employees to the IRS. This is done through the issuance of a 1099, and not issuing 1099s to contractors and freelancers or other non-employees can cause businesses to face penalties with the IRS. So what actually changed with the form? So the recently updated W-9 form has two main changes. For starters, it has clearer instructions for LLCs. It's important to remember that an LLC is a legal entity, not a tax entity, and this revised section makes it easier to distinguish that. A contractor may be an LLC but taxed as an S-corp or a partnership, so these changes help prevent confusion during filing. The second change, and I would say this is rather major, and we are seeing the government crack down on this in all forms of compliance, relates to foreign ownership. A new line has been added to the form as it requires partnerships, trust, estates to disclose whether they have any foreign partners, owners, or beneficiaries. This change helps with tax reporting compliance as it relates to international ownership. So please keep in mind, if/when you hire any non-employees, make sure you're using the updated W-9 form to avoid any issues. These changes help the tax reporting process and aid in increasing transparency in business transactions. So to wrap things up, I'll briefly touch on a few more tax changes, but I'll keep it rather high level. For starters, the HSA contribution limits have increased to $4,300 for individuals and $8,550 for families. The FSA contribution limit has increased to $3,300, and these increases allow small businesses and their employees to set aside more pre-tax dollars for increasing medical expenses. So the last tax change, going back to Illinois, is starting January 1st, 2025, lessors can purchase tangible personal property intended for lease without paying sales tax at the time of purchase by claiming a resale exemption. However, they're required to collect sales tax on the lease payments received from the lessees. So this aligns Illinois with more common practices in other states and helps to shift the tax incidence from the acquisition cost to the lease stream itself. One more slide. There are new. Sorry, did I already go over this slide, Melissa? I think I did.
I'm not sure. I think they might have been a continuum, but we'll move on to the next one.
Yeah, I think it is. My apologies. So here's my last slide. So lastly, there are some new data collection requirements for lenders. The Consumer Financial Protection Bureau now requires lenders to collect demographic data on small business borrowers. So this information includes race, gender, and business size. And while this change is directed at lenders, it does affect small businesses during the loan application process, as they will now need to provide this information.
All right, perfect. So I know Manny just went over a million things and we were like, what is happening? So I would suggest that you take the presentation slides that we'll send to you and you reach out to your tax professional and inquire on what of this might apply to you and how it can specifically benefit your company. There are a couple of things that were covered. For example, the returning citizen benefit that's there and available for you for credits. If you have already been hiring individuals who are returning citizens, then for sure that's going to probably apply to your company. If you have not, and it's something that you are interested in doing, then obviously you're going to want to know more about it and how that can impact you and what the financial benefits would be, and maybe what you want to budget in your company for allocating to that specific initiative. As it relates to the franchising, if you have ever considered franchising your business or your company, that information is going to apply there. One of the more time-sensitive ones is the tax credit for the equipment that he mentioned. Obviously, we're going to be ending 2024 here shortly. That was the largest percentage that was available at that particular time. So you would want to maybe get with your accountant and see, one, does that credit make sense for you? And then two, specifically what equipment makes sense and that applies to that particular credit. So maybe you need a new truck or new excavator, equipment like that. You want to make sure that if it applies and it would benefit you, that you go ahead and make that purchase in this calendar year if possible, but definitely consider it for the following year. So like I said, just take this presentation because there was so many different benefits that are happening and so many changes, and use it as a reference to at least start and initiate the conversation with whomever is managing your books and your accounting. The other one that I do want to also make sure of, which sometimes we just are so used to working with our continual subcontractors, is the 1099 form, making sure that we use that updated form because it is something that should be completed on an annual basis and stored in the record. So you can go do you can search W-9 and get the latest updated form online. I will include, actually, let me make a note right here. I will also include the link for that when we send out the presentation material at the end so that you can access that form, because I know many of you probably are using it. So thank you, Manny. And if there are any questions on this topic, feel free, like I said, to enter them in the chat, and we'll be happy to answer those. So I'm going to move over to a couple labor law changes for you to reference. So the first is federal overtime rules are going to be changing. So the U.S. Department of Labor has finalized a rule increasing the salary threshold for overtime exemption under the Fair Labor Standards Act. So effective on July 1st of 2024, the salary threshold increased to $43,888 annually. And in January of 2025, it will raise to $58,656 on an annual basis. So this change means that salaried workers earning less than these amounts would be eligible for overtime pay when they're working over 40 hours per week. So you do want to take a look if you do have any salaried employees and ensure that if they are in 2025, their salary is less than $58,656 and they are working more than 40 hours, that they would be entitled to overtime. The Illinois minimum wage is increasing as well. So as you may or may not know, this act was initiated back in 2029. It was signed to be in effect as of 2020. So since 2020, our minimum wage has been slowly increasing on an annual basis. And again, it will increase at the final number here at $15 per hour starting January 1st of 2025. So you will want to make sure that you update your accounting systems or your QuickBooks systems to ensure that transition, that on January 1st, any employee who is working would receive that minimum wage of $15 per hour. As you can see, there's a link at the bottom of this slide that also has additional information about the minimum wage. You guys may or may not have tipped employees or tipped wage paid employees, but there is a separate chart for them. And in addition, that this does apply to those that are 18 years and older for this minimum wage increase. So if you do have any employees that are under that age working for you, you definitely want to reference that link to ensure that you're in compliance with the wage changes that are occurring here shortly. Then we have our Paid Leave for All Workers Act. So this is a new one that got introduced last year, actually. So you, if you've not looked at the Paid Leave Act, you will want to make sure that you reference that, because there could be penalties that are applicable to you if you did not offer this to your employees. So basically, the Paid Leave Act was initiated to allow employees to have time off that are working for a company full time. So for every hour an employee worked, for every 40 hours that an employee worked, they accrued 1 hour of paid leave. And this is applicable to those that may not have your own time off policy within your organization or your company. So there's a lot of information on the site that talks about, when it starts, how many days or months that employee should be working for them to accrue that, and when they can first use it. There's also rules that if that employee leaves, what can and cannot be done about the payout for those employees. So definitely take a look. If you do not already have a paid time off policy equal to 40 hours, this is something that you should have been incorporating for 2024. You obviously still have time to let your employees know they've got that accrued time to use, but then also ensure that that is set up for you in 2025. If you are using QuickBooks software, there is a way to add that to employees so that information is automatically being set up on the back end for you when you're doing your payroll. So if you do need assistance with that and you are a DBE certified firm, we can help you with that through supportive services. If you are not a DBE firm, definitely reach out to whoever's managing your bookkeeping and accounting or doing your payroll to ensure that that is set up. The Illinois Secure Choice expansion. So this also has been a new act that has been enacted here in Illinois for I think we're going on 2 years. Don't quote me on the time frame, but it has been for a bit of time. And this is basically a retirement program that was set up so that employees who do not have traditional retirement, or the company itself is not offering a retirement program, it allows that employee to contribute to their own retirement through an automatic payroll deduction from their workplace. The great thing about this is that it does not, as the employee, if they leave a company, it always stays with them. So they have an account through the Illinois Secure Choice as well. And as they move from company to company, if that company is not or does not have a retirement program that they can participate in, they are able to do this on their own. And I think that's phenomenal, because we do have so many individuals who work, they're not contributing to their retirement, they don't know how. So although this program does put more onus on smaller businesses to make sure that we are making our employees aware of this and following that process, it truly is a good program for those who may not have had access to retirement. So basically, the state law requires that every employer that has at least 5 employees in every quarter of the previous year and then has been in business for at least 2 years must offer their own qualified retirement plan or facilitate in the Illinois Secured Choice program. So basically, you would create an account on their system. You would notify your employees that you're entering your employees in there. So they will be notified, but you'll also want to let them know that there's this part of this program. They then have the option to opt out. When this was first being rolled out, it was an auto opt-in program. So the employees had to go in and say, I don't want to participate. So that was a little bit of communication there to educate them on creating their accounts and going in. And then in that account, they also can make their adjustments of how much or what percentage of their payroll they want deducted and put into the retirement fund. So this doesn't cost the employer anything. It really is employee funded for this program, but it does require you to go in and set the account up and have this available to your employees if you do not have your own retirement plan. Employers covered by the state law will be contacted by the program. So once you enter your employee into that system, there is back-end processes where the state is reaching out to them. And then covered employees who do not meet the required deadlines may be subject to penalties and finance charges. So make sure that you use this website, the employer.ilsecurechoice.com is the site you're going to want to go to. Employees have their own link in their own section to the site, but it's very intuitive. And I will say that there is phone numbers, or there are phone numbers available to reach out to the team at Illinois Secure Choice to help you through the process. And they are very, or have been in the past, very reactive. So great customer service when you call in to make sure that you are understanding the process, the rules. So please reach out to them if you need support on that. We also have the Workplace Transparency Act, so ongoing updates and compliance checks related to anti-harassment, anti-discrimination training is required and a priority. So every single year, companies have to do a sexual harassment training prevention with their employees and have a signed certificate that employee participated in the certification training program, and keep those on file. So if you've not yet done your sexual harassment training with your staff and your employees, you will want to make sure that is on record for the calendar year of 2024, and then make sure you're doing that on an annual basis from there. There is great training and support available to you at the dhr.illinois.gov/training website. They have other topics as well that can assist you as a company. So definitely visit their website and see what training may be there that you, one, need to do for sure for compliance. And then two, just some of the other benefits that they have been putting out there for us to be great business owners and leaders as we're working with our teams and our employees. So please make sure that you look at that act and ensure that you complete the sexual harassment training with your team before the end of the calendar year. Any questions? Awesome. I also thought as well, I wanted to add too, as I was sharing the presentation, Manny had also mentioned that the lenders are going to start asking for demographic information from companies when we are applying for lending and loans. And I know historically there has been lots of conversation as it relates to difficult access to capital and lending for individuals who are minority owned or female owned companies. So I'm sure it's very debatable as whether or not this information that's being collected, you know, is being used for good, or if there would be concerns down the road. You know, personally, I feel that it's data is great to have and be collected. So once it is being required and collected, we can see where there are disparities and concerns with access to capital or access to income and funding. So just be cautious that if you are applying for loans, those questions will be asked of you and will need to be provided. And it's the hopes that that information will be used for the betterment of lending in the future. All right, last takeaway. So employers should review and update their policies, payroll systems, and employee handbooks to align with the new laws. Make sure, again, the DHR site has the sexual harassment policies that you can include in your handbook as well. So make sure that you're updating all your policies, your payroll system to incorporate the minimum wage changes, the PLA time that we discussed. So take the time to make sure that those are all set up. Compliance will ensure a smooth transition into 2025 and mitigate risk of penalties or employee grievances, which we do want to avoid. So as mentioned, also this presentation again is for informational purposes only. So you will want to talk to a professional accountant, tax professional. If you do not have one, ask a friend, find out who your other colleagues are using for these particular services and work through referral base. You can also contact the supportive services team. We are careful on the resources and referrals that we're able to give, but we'll hopefully be able to at least direct you in a way to get in touch with a professional that can support you with the things that were covered in this presentation. As we mentioned, each of us, Emmanuel is a tax professional who's EA certified with the IRS. So he does have more detailed information as it relates to the tax side of things. But most of this presentation, obviously there are experts within those agencies and departments that manage and run those. And we are just providing you information to know and incorporate, and then best practices to reach out and see how those align with your company business directly. So there is that. So we're going to move into the IDOT goals. If you've been on our webinar and presentations before, we did cover some of the benefits of what we do and support as the agency. As Brian mentioned, we are consultants with Illinois Department of Transportation, and we're supporting within their supportive services program, their disadvantaged business enterprise program. So individuals who are eligible to certify or apply for this program, we provide support to them to ensure that they're successful with gaining work through the Illinois Department of Transportation specifically. So IDOT's done a wonderful job of creating this program, providing various resources to those that either are seeking to do work with IDOT, those who are already doing work with IDOT, and prime contractors who are working with our disadvantaged businesses to do work within the agency. As we mentioned prior, Brian is the one who launched our workshop off today. He is the Deputy Director at the Illinois Department of Transportation in the Office of Business of Workforce Diversity. Has been a pleasure to work with and managing this program. If you have any thing that you want to share, feel free to reach out to Brian directly and let him know what either a horrible or wonderful job we are doing as a supportive team collectively to support you. This is the supportive services map here and the services that we provide. So they're basically broken into 3 different areas of support that we provide to those firms, as I mentioned, that either are seeking certification or who are a certified DBE, who are working on IDOT contracts. So the first is our certification department. So those that are not currently a DBE firm and are seeking to become certified, we have a team broken into 3 different areas of our state that can help assist with certification, or if you are a DBE and you want to expand your work categories, we can assist with that. And then the other two areas are the management side and technical side. So those firms that have been certified through IDOT as a DBE, we provide various services to support in that area. This is a screenshot that's showing you what services can be provided. So on the left hand is where some of the services our technical team provides, which is the estimating and bidding, equipment and resources, project site inspections, and then on the right side are the management services. So the QuickBooks systems, the things that we talked about, making sure that your maybe your equipment is allocated correctly. So when your tax accountant does your deductions, everything is put in the right area for that, supporting you with your payroll, minimum wage changes, those types of things. So those are services that the management team can help support you on as well. And then there are resource centers. So as LaShonda mentioned with the BOI disclosures, that is an electronic process. If you do not have access to good internet or computer, we have resource centers in our 9 districts to support and help you with that. There are copiers, printers there as well. If you want to find a resource center local to your market, you can scan this QR code here. And then also many of the supportive services that we have provided, we've gone into more in depth about them. I'm kind of doing a quicker high level of these today because we have recorded videos available on YouTube that explain them more deeper. So if you would like to reference those, we'll also have the links for you to see these videos about our further services. But there are resource centers in your district that are available to assist you. And there's also compliance officers that can help answer any questions pertaining to state and federal contracts with IDOT and making sure that your company is in compliance with the labor laws and the rule changes that are occurring with the contract work through the transportation department. Once the company is IDOT certified as a DBE, there are many programs that we provide. One is a reimbursement program. So we help assist with reimbursement on qualified expenses that your company may already be paying for. We also will be enacting our business development program soon, which allows 15 firms to be a part of our business development program. We analyze the company, help provide custom training, reimbursements, and support those firms. So stay tuned for that down the road. Mobilization payments is a program that was set up to help our firms get on the job. So a lot of times equipment is needed to get your workers started on contracts. And so this helps by giving you an upfront payment that gets deducted off of the total of the contract, which is given 7 days before starting work. So that's a program that was also available. Another good one is HCCTP. So I don't know if you guys are familiar with this program, but if you are looking for skilled labor to help you with your contracting or work, we partner with Illinois community colleges throughout the state to train individuals through the workforce. If you hire one of these individuals, you can also get reimbursement as well. So please visit and learn more about the HCCTP program. And if you know anyone that is interested, the eligibility is open for women, minority groups, and other people who are historically underutilized within the population. So if you know someone who's 18 years or older, has a high school diploma or GED, valid driver's license, and the ability to pass a drug screening and is interested in going into trade work, this is a wonderful program for those individuals. And my favorite part are events and resources. So one of the great things that IDOT Supportive Services offers in the Workforce Department, or in this case, the Bureau of Small Business Enterprises, is events and workshops. So just like this one, we are trying to ensure that we provide information, knowledge, best practices, policies, and have these available to you as you build and grow your company. So every year we have our Building Blocks Workshop series that runs during the slower time of the construction season. And then we also have local in-person events and networking throughout the year within your district. The bottom of that slide on the right-hand slide, there is a bit.ly DBE workshop link. You probably used it to register for this workshop. Additional workshops are going to be added for our series, so stay tuned for that and make sure you follow that Eventbrite link so that you can be notified when new workshops are coming up. We have the save the date for TCTR, but now we have the register for TCTR. So TCTR stands for Today's Challenge, Tomorrow's Reward. And it is a big annual conference that IDOT hosts each year. This year, it's going to be at the Crown Plaza here in Springfield on February 26th and the 27th. There will be an event the day before as well that has limited availability. So if you are interested in attending, please make sure you register as soon as possible. We will include the registration information in the follow-up email that we send out to you after this presentation. But it is a very, very good conference. You can expect speakers. We have a motivational speaker this year, Jackie Joyner-Kersey. We also have breakout sessions with different various workshop topics. We have opportunities for networking. There will be exhibitors there. If you do have, if you would like to have an exhibitor booth to share your product and service, you can do so as well by signing up with that registration link. And the best part is there's no cost for any of this. You get a couple meals. Thank you, Anna. Anna put the registration link in the chat, so please use that link to register. But you know, they feed us, they entertain us, they educate us, they allow us to connect with individuals and have a very, very good time over that 2-day course. And there's absolutely no charge. So please register. We look forward to seeing you there at this event. We also will have awards and recognition. So these are past winners of the awards in the various categories. This year, we're going to have a construction/trucking DBE of the year, an architect and engineer DBE of the year, supplier professional service DBE of the year, prime of the primes, and the Roberto Memorial Reward. The nomination link for that will be coming up as well for you to nominate any firm that fits those categories also. Then this is the slide for the building block series that I mentioned. So our next workshop, this is the last one of our 2024 calendar year. Our next workshop is going to be on Tuesday, January 7th. And the topic for that is accessing capital and what banks are looking for. So we did cover that they're going to start asking for some demographic information when applying for loans, but there will be a full in-depth workshop if you are looking for lending or may be looking for capital in the future for your company. Please attend that workshop. Over to the right shows the rest of our series. All of these are typically done on a Tuesday and Thursday from 10 to 12. This year's series is running from December through March. Again, all of our workshops are not yet on the Eventbrite, so make sure you register because as they're being added, you'll be notified. But we're wrapping up our Doing Business with IDOT series. Today was part of our compliance and risk management series. So we will be moving in next. The month of January is going to be financing and financial series, then moving into strategies for business success, and then leveraging the technology and innovation. So you can see here, January, and this all will be emailed to you as well. Those are the topics for our January sessions. Then all of the recordings for these workshop sessions are housed on our YouTube channel. So we'll have the link for you for that as well. As I mentioned, I quickly went over the programs that we have available as part of the supportive services program. So there was a webinar done at the beginning of this month that is posted on the YouTube channel. So visit that. When you get to the channel, you're going to go over to the playlist section, click on playlist, and then all of those videos will appear that we've recorded for our past. This is going on our 3rd year of Building Blocks content. So all of that's housed there for you to reference any additional learning that you would like to have. So that was a mouthful, and I'm looking and I do not see any questions in the chat. So feel free to enter them if you still have any. Meanwhile, this is our QR code for our workshop survey. So we do have 50 minutes left from our allotted time on the workshop. If you wouldn't mind, please take a second to scan that. I don't know if I have I should have copied the link so I could have put it in the chat as well. LaShonda, you might have that reference link if you could find it. If not, I'll get it here in a second. But you're going to scan that code. When you get to the survey, you're going to want to select the compliance and risk management series. That's the particular series that we are in right now. And then you're going to want to click on the 2025 New Year, New Rules workshop. And then from there, you'll be able to provide the feedback to us on how we've done with this workshop. Also, there's a section for comments. Please let us know if there's other topics or other information that you would like to for us to consider. We would be very much welcoming of that information. And I think I found the link here, so I'm putting it in the chat now. So that is the link to take this survey. And then I will also put the agency's contact information on the screen. So that is the phone number and email to our supportive services and Bureau of Small Business Enterprise program departments if you do want to reach out to them about anything specifically. All right, so Brian, Anna, do you have anything that you would like to add before we close out?
We do not. Thank you very much, Melissa and LaShonda.
Perfect. Well, thank you all for attending. I hope you had a chance to get those links. If not, as mentioned, we will get this presentation recording out to you as soon as we are able with all of these supporting documents for you. We hope to see you on our future workshops. We hope to see you at TCTR, and have a happy holiday and a happy new year, and look forward to next year. Thank you all.